welcome to another episode of the Eitel Insights podcast. As always, we've got your podcast host, Andy Park. And as always, we've got our founder and lead analyst, Dane Eitel of Eitel Insights. How are you doing this week, Dane?
Excellent, Andy. How about yourself?
Good.
We're looking forward to some condo discussions today, right?
Yeah, that's right.
Excellent.
We'll look at condos for the month of November. We're kind of in the home stretch of the year now, which is usually when a lot of interesting activity happens. And kind of as evidenced by our last podcast, we got a lot of views, got a lot of fruitful discussions. So we want to continue that trend here. So just to kick it off a little bit, in June of 2019, we had about, an average sales price about $643,000 for the condo market.
Correct.
Right. So we saw a little bit of a bump in September, which caused maybe a little bit of unfounded optimism, but we saw a little bit of a drag back down. So what's happening in the fall, and what do we anticipate kind of moving towards the latter half of the year and the end of the year?
Sure, yeah, and exactly to your point, June kind of was our yearly bottom, if you will, and almost culminated from the last few years of losses since January 18 was the true peak at 751,000. So prices actually came down and evolved lower right till that 643 mark, which coincidentally, we'll throw the chart up right here now, and that's right at that middle threshold, right off of that yellow line, which was a previously established price. And so, not so coincidentally, the market got a little bit of a buoyed spirit at that price point. Now, again, that was at 14% off of peak, right? So in some areas you had stress test mitigations, maybe others not so much, right? So that kind of stands to reason why we did see a little bit of a recapture of prices. And what's interesting, to your point, in September we saw sales at 673,000. In November here we see it at 670,000. Well, that's a lowering of a high, right? So the previous high was higher than this month's high. And of course, the month previous, we went lower. But also what it's actually setting up is a divergent trend with numbers still increasingly going higher. And then we have this topping seemingly sorting itself out. So we anticipate to see a reaction probably first quarter of next year as soon as it breaks out of this divergent trend. It wouldn't surprise us in the least to see it go lower. Kind of going forward into 2020, we are expecting to see a retest of that 10-year uptrend, right? So that was indicated by the black lines on the chart there. So, the market, it's seen its buoyancy. We don't really anticipate that going too much further. You had some good bargains, and we're also expecting, what the market is actually realizing is the pricier places are actually going at a quote-unquote discounted price, right? And so that's why you see the sales prices actually jump up a little bit higher, even though the higher end are starting to come a little bit lower. So it's kind of an evening out of that market, where we believe, of course, going forward, the market actually does lag lower, and we retest prices. Probably early 2021 will be the end of it all, or technically speaking, and then go right into 2022 for the condo market, and so then that's when we'll see prices right around 525,000, which is at the lower end of the threshold. Currently, we're very much in the middle, and expect next year we probably test out that top half of the lower third.
Okay. And just as for definitional purposes, I just wanted to give a quick heads up to our audience to possibly reconcile different numbers they might see. So we've spoken about this before, but the market is down roughly 10% from the peak in 2018, specifically the condo market. But kind of readers and surveyors of the market, they might see a year-over-year number of only 3% from the real estate board. So just for our audience's benefit, can you quickly explain the difference?
Absolutely. Yeah. I mean, year-over-year, it is down 3%, but again, from where it was down 7% in June from that November price point, right? So
November 2018.
2018, exactly. And then so you see a recapture of the wealth of basically 4% from that June number, and that leaves you with a 3% year over year. And let's not kind of forget how we got to November of last year. It was just horrible number of sales and all of this, right? So it was kind of perceived to be this horrible time. However, and they said as soon as sales comes back, then prices should start to increase. Well, we don't see that going long term. You know what I mean? You're seeing a little bit of a snapback here, probably stress test mitigation, and you do have that need-based buying, right? I mean, Greater Vancouver, you always have people that are renting wanting to purchase. As soon as it kind of comes into their snack bracket, they can go ahead with that. We don't really see investors or any of that stepping up. And of course, as we've mentioned here going forward, we see that inventory going through the roof, right? And we'll get through that here later on in the podcast.
Okay. Sounds good. So hopefully that cleared things up if there was any confusion there. But
one other thing, just on that kind of clarification, what we quote, we've said it in a number of podcasts previously. We always quote average sale price. We believe that's the truest indicator of the average price in a market, which is kind of how it's the psychological values. Are we going ever higher or ever lower? Well, how do we get that is by average price. We don't use median. We think median's more closely tied to the sales numbers, right? So if you have a lower sales numbers and there's only 50, you're going to get a different median than when you have 1,200 or whatever sales, right? So we see average as being that truest value, whereas the board quite often quotes the HPI. And initially, about a year ago when the HPI first hit the 1.4 mark, we had clients saying, yippee, like your prognostications come true and this much early. And we're going, no, actually the sales price was down to 1.47 in the detached market, but 1.4 overall, we use average, not HPI. So similar with the condo prices, they have the condo HPI, we use the average sale price. So that's kind of misconstrued. What we see the HPI as is a lagging indicator, lagging the market by about 6 months to a year. And basically it kind of takes the rough edges out of the market. So it kind of always shows a smooth line. We know better that the market's never a smooth line. So that's how we get our data is average sale prices.
Right. Okay. Sounds good. And obviously we can get into a completely different statistical discussion of the benefits of mean versus median, but we won't do that here.
Absolutely.
Yeah, there's some philosophical differences there. So I wanted to shift over to sales numbers here. So
sure.
You kind of, right before this podcast, you were mentioning to me that this slight increase in sales numbers that was reported by the real estate board might actually be slightly misleading. So tell me why.
Well, I mean, last year, again, it was a horrible year, right? Sales were lowest that they've basically been in the last 15 years. We're near record level lows. So in 2018, there was 814 condo sales. I mean, far gone from this, 2000 North days when there was a hot market and all that. Mm-hmm. So the fact that it's up year over year, again, a little bit misleading, right? So we'll throw up the sales chart here on your screen, and you can see that, again, yes, it is up, and we have a very kind of staunch upward trend developing. So the November data was 1,220 sales, and so, again, you do see that increase of roughly 400 sales. However, we're still very much in that midst of a downtrend in the overall impact of a market psychology. And you're seeing the sales show up on price points that have already kind of realized their losses. And as we get into that inventory, we can kind of get further into that discussion. But what we believe that we're seeing here is, the seller that is leading the edge, and certainly that's in price point, are the guys that are receiving the bids. There have actually been a few multiple offers that have captured the media's attention, right? But those are few and far between, and probably at a snack bracket that maybe wasn't deserved. So that's why you did get those multiple offers. It's not a true multiple offer on a property that's been there, there's too much inventory for there to truly be multiple offers on a need-driven basis for every condo market, right? So you can sense something might have happened there. Maybe they underlisted it by a tune and let everybody know about it, and then of course you get that multiple offer. Great for the media headlines. However, when you have an overall month of 1,220 sales, that's right around that average from the last 15 years. Mm-hmm. One interesting thing about the average over the last 15 years, the inventory is ever increasing. Every time you build a new condo building, we don't add 2 or 3 apartments. We add hundreds of thousands of apartments, depending on hundreds or thousands, depending on the size of the apartment building, right? And that will continue to build up here into 2020, 2021, and culminating probably by 2022, and we see all of this pre-sale inventory actually hit the market. Mm-hmm. And that's what I think a lot of people are kind of misconstruing here. Wow, we're back up to 1,220 sales. Yes, but that's not enough demand that will mitigate this onslaught of inventory coming to the market, right? Mm-hmm. So, we do recognize that the sales are higher than year over year. However, year over year was coming literally off the floor. And just because you didn't lose the fight by getting absolutely knocked out, doesn't necessarily mean you're doing very well in the fight. I mean, you just got up and you lived through the 8 count. God bless it. Yeah. But you might get knocked down again, right? So we'll see how the market actually does do going forward. But we anticipate seeing a sales range, and the inventory ever growing, which would lead you to lowering prices to achieve that segmented sect of buyers.
I always love a boxing metaphor whenever we can fit. Well, there is an excellent. We won't get too into it, but there is an excellent example of that this weekend with the UFC. But
you're a big fan.
We'll move on. So speaking of inventory, looks like in the fourth quarter of 2019, so starting in October, bringing us into November. December is not over, so we don't know yet what's going to happen in December. But what's happened in the past couple months?
Yeah, one can kind of lead us to believe that the inventory is not going to spike in December. I mean, it's Christmas, and truthfully, the market hasn't been on a tear in any way, shape, or form where you're saying, you know what, I got to get my property on the market to achieve this X amount of dollars. There's talk that the market is recovering, which we don't believe in, just for factual, from our opinion. Everyone's entitled to their opinion too, and we'll kind of get into this. You know, as you brought up, our last podcast had a fairly heated debate at the bottom in the discussion board, which we encourage. Keep it polite and respectful would be encouraged as well.
Yeah. No name calling, please. No ad hominems.
Exactly.
But
so you know, to kind of get on that, it's. The sellers that we see here with the inventory. Let's get back to our conversation at bay, and then we'll digress later on into it.
Did we get slightly off track?
We did. So let's pull it all back. We'll throw the chart up on the screen here, and basically what you see with the inventory is a break in that aggressive uptrend, right? So the November data for total inventory for the condo market of Greater Vancouver was 4,105 listings. Now, what's interesting about that? Yes, we're off of the peak that we were at several months ago. However, the brand new listings in the month of November from 2018 compared to 2019, there was only 300 less newly listed properties, right? So there was actually 1,370 newly listed properties in the month of November for the condo market. And you go back to where there was 1,220 sales. Well, it kind of stands to reason that the newly listed properties that are being aggressive because maybe they don't believe the market's going to recover so quickly and they want to get ahead of this possible onslaught that's coming, they're listing realistically and achieving the sales. There's a lot of inventory that's been on the market for 100 plus days, right? And that kind of goes us back to our earlier discussion of a few getting multiple offers. Well, that's not the majority of the market, but that is a guy that's saying, you know what? I'm going to take my bird in the hand rather than hopefully wait for two in the bush, right? So you might scare them both away and everybody's gone, or there might not be two birds in the bush. It's a stinking rat, you know, and you don't want to eat that rat, right? So that's kind of how we maybe will equate the 2020. It unfortunately probably won't be two birds in the bush for the condo market specifically, the detached market for that matter, just due to the inventory, right? So, and you've heard a couple of media reports lately that, you know, honestly, the few purchasers on a smaller condo development, they're suing the owner because they can't complete on the building now. So they want their deposit back, and I mean, it's going to end up ugly. Well, you can take that as an example and maybe weigh it out to these buildings that have 1,000 plus units coming to the market. Well, those investors that bought 5 and 6, and it wasn't fair when they were able to buy, and the average person in Vancouver couldn't. Well, now, you know, they're going to be left with that inventory, right? So either they're going to have to rent it out or they're going to have to put it on the market, and probably a split of both. They'll try and rent it out. They'll try and sell a couple. So the market will be inundated with inventory for the rental market going forward, 2020 and 2021, and for inventory, period, you know, for properties listed. That's new inventory, let alone what we have with the actual existing inventory of 4,000 plus listed. Of course, we do have that seasonal factor that we talked about earlier. You know, people that have been on the market for 100 plus days, they probably had a discussion with the realtor and say, you know what, we're going to take Christmas off. I don't want this one or two showings that have been coming in lately to disrupt my family event, because inevitably they seem to want to show. There wants to be a showing when you actually have family coming over, right? So they just take it off the market. Spring, you will see an abundance of listings, and then you get the development starting to complete, and that'll be a prophecy that will be fulfilled going forward. It is fine and fair to have opinions on the market. Our track record, Eitel Insights, has been very, very precise with our analysis of forecasting prices, forecasting situations. You're starting to see some foreclosures take place already. That's something we prescribed a few years ago. And again, you've said it kind of that it's a very heated topic because people are so heavily invested, right?
Of course, yeah. It's a very personal topic, right?
Absolutely. And one thing that we want to make fairly clear, when we say the market's falling off, we don't say that we never have ever said that it's going to zero. Like, I mean, Vancouver will always receive a bid. One thing that we've made fairly abundantly clear is that real estate cycles do exist. Right. We believe, we've firmly proven that we're in the midst of a real estate cycle, and what we believe is that we're not done with that cycle evolving lower to previously established prices before it can get its bounce to evolve to the next cycle, right?
Yeah, I think that's an important point too. Like, we do get some comments once in a while saying Eitel Insights are, doomsday warners and like doomsday announcers, but at the end of the day, Eitel Insights really has no skin in the game whether the market is going up or down.
We don't lay out money for mortgages. There's none of that going on, right?
Yeah, exactly. Like if the market was exploding right now, Eitel Insights would be telling the truth like it is that way.
We'd be grateful for it, and we've prescribed other markets that have been doing well. I got an email the other day from a gentleman saying, well, there was actually a few of them. One saying, hey, would you have still stayed with the Fort McMurray data because it looks like it's going lower? Well, and then another client says, thanks God for the Fort McMurray forecast because it's actually bottoming. Again, that market is in the midst of bottoming. And truthfully, it's broken out of its technical point by about $3,000, which is a fantastic thing. You're not going to see an acceleration in prices in a bottoming market, but you are going to get great discounted prices to purchase going forward over the next few years, and then you'll start to see that acceleration. So I think, it's just that difference or how acutely you listen to us, right? Yeah. A down market, you're looking for the investment. You're not looking for the quick buck. If you're looking for the quick buck, you're looking for a growth market, which is what we kind of allocated, which Halifax would be. Lo and behold, there was a 10% within 3 months after we kind of let it be known that Halifax was a great investment idea, right? So if Vancouver was bottoming, we would have been the first to tell you, because we like to believe that we are the leader of information, that we offer actionable intelligence. It just so happens that we don't believe that Greater Vancouver is there at the bottom yet. Prices will evolve lower, especially in the condo market, because it does lag the detached market. Both markets are very much going lower, and you're going to have more inventory, more opportunity as a buyer the longer you wait. Is there going to be a day where you're going to wait too long? Absolutely. We don't want to have you go away for 10 years and come back and say, where's the inventory? You know what I mean? This is timely information. This is going to happen over the next couple of years. But eventually Vancouver will be bottoming, and we'll show you technically when it gets close to bottoming and why. Again, what we speak to here on the podcast is a broad base. It's Greater Vancouver, and we've had people say, can you do our little section here, or can you do Fraser Valley? Truthfully, we do them all, right? But this is a business, right? Yeah. So we do sell all of those reports. There's static reports that are entry-level price at $250. We get our comprehensive reports at $2,500, and then we go up from there depending on the different level of clientele, right? Or what their needs are. But if you're looking for a Fraser Valley report, we're going to give you all of that and more than what you see on the screen here on a weekly basis inside the report. Of course, you're going to get a conversation with us as well, and we'll give you the forecast for your personal situation. Unfortunately, like I say, it is a business. The time is spent up with our client base, so we can't do podcasts on a daily basis to advise everybody. If the government wanted to pay for our service, or the board wanted to pay for a service, I'd be more than happy to do it. I don't think that they're going to do that, especially given our forecast differential. So, but sure. We've appreciated the following that we've been getting here, especially with the podcast, and I think our podcast host has a great deal to do with it there, buddy.
Thanks, buddy. It means a lot coming from you.
One thing that I wanted to just quickly let everybody know here, to kind of prove up that point, bringing everything back into the condo discussion. As we brought up on the last podcast with the detached market, we showed you the days on market. We're going to show you the days on market here for the condos as well, and that basically is similar, right? So you're seeing an aggressive uptrend in days on market, again, leading to your fact that you probably have your haves and your have-nots when it comes to listed properties. You have properties that are merely being listed just to kind of accumulate dust and have realtors show, but really no prospect of selling. And then you have sellable properties that are listed sharply, that are getting action, and maybe even in some cases getting multiple offers. If you have a conundrum going forward and you got maybe too much inventory, you have too much equity or too much finances tied up in the housing market, especially in the condo market, we might advise that, yeah, you might want to be unloading those assets before it gets worse, right? Holding it's never a wrong idea. You can live through this, rent it out, and go forward. Life will get better. Days on market will start going back down eventually. However, with the way that we sit right now, to sell your condo in Greater Vancouver, you do have to be sharp. Using a CMA that shows you the last 120 days of sales might not behoove you going forward and actually achieving a sale. You have to have some forecastability and kind of like we said earlier, take the bird in the hand rather than wait for the two in the bush.
Yep, sounds good. And I think that's an important point about days on market and inventory too. And that's actually what you just mentioned is what I wanted to bring up. And that, you know, even if we see inventory fall, you kind of have to be careful about what the implication of that is, right? Because as we were talking about kind of before, is that, you know, it's just because inventory is falling, it doesn't mean that the market's really healthy. It might be that
Absolutely.
People are just taking their properties off the market because they're sick of trying to sell it, right? So this is kind of akin to the criticism of U.S. unemployment data that people always bring up, is that, you know, U.S. Unemployment rates seem to be dropping, but they actually don't count underemployment and people
Right.
that just kind of gave up trying to look for work too, right? So I think that's kind of an interesting comparison with the inventory data in Vancouver as well. So just because you see falling inventory doesn't...
It's not the demand eroding the inventory.
Exactly,
It's people saying, you know what?
Yeah.
We'll see you
Yeah,
later.
I
I'm taking Christmas off.
Exactly. I don't need to sell right now, so I'm going to take it off the market.
Exactly.
Right? So,
And you know, ideally, we'd love to see Greater Vancouver in a position where nobody ever needed to sell.
Yeah.
Unfortunately, we strongly believe that the condo market from top to bottom will see a 30% recession.
Yeah.
The recession word is a pretty volatile word again. The way we use recession is a technical standpoint. Any market that has seen a 20% decline in prices is technically in a recession, right? So at a 30% decline, that's technically recession point, right? So if it was 19%, we would never even go near that R word. Unfortunately, the forecast from top to bottom, we believe, is at 30%, which would leave you another 19% going forward from November's data to where we think this market will actually bottom in the Greater Vancouver condo market.
Okay, perfect. So we are officially out of time. Thanks, everyone, for joining as always. If you want to learn more, visit eitelinsights.com. To look at the reports, take a look at the right side of the page. If you want to get more information, email Dane at eitelinsights.com, and we'll see you on the next one.